Imagine waking up to see a stock you've never heard of skyrocketing in value seemingly overnight. Welcome to the world of Wall Street bets. In the digital age where social media platforms have become the town squares of our time, a new phenomenon has emerged in the world of stock trading. It's called Wall Street bets, a Reddit community that has shaken up the stock market and made headlines around the world. Wall Street bets originated as an online forum where amateur traders could share tips, memes, and discuss their bold market moves. But it didn't take long for this community to evolve into a force capable of moving markets. Suddenly, the world was watching as the little guys took on Wall Street. The GameStop saga is a prime example of the power of Wall Street bets. GameStop, a struggling video game retailer, found its stock prices soaring from around $20 to a peak of nearly $480 in just a few weeks. All thanks to the collective buying power of the Wall Street bets community. But why GameStop? The Wall Street bets crowd noticed that hedge funds were heavily shorting GameStop's stock, betting that its value would continue to decline. In response, the Reddit traders started buying the stock en masse, driving up its price and causing a short squeeze. This forced the hedge funds to buy the stock at higher prices to cover their losses, further driving up the price. This David versus Goliath story played out on the world's financial stage was a stark reminder of the democratizing power of the internet. It showed that the stock market, traditionally a playground for the wealthy and well-connected, could be influenced by a group of ordinary individuals banding together online. As dramatic as the Wall Street bet saga was, it's essential to remember that this isn't the norm in the stock market, a place of calculated risks and strategic moves. At first glance, one might argue that the stock market and casinos share some similarities. Indeed, both are arenas where money is wagered, and both involve a level of risk and uncertainty. Let's delve into these points. In the stock market, as in a casino, there's an undeniable element of risk. When you buy shares, their value can rise, offering the potential for profit. However, the value can also fall, leading to possible losses. Similarly, in a casino, you place your chips on the table, and the roll of the dice or the turn of a card could mean walking away with a hefty payout or losing your stake. The uncertainty factor is also a common thread weaving through both the stock market and casinos. In the stock market, despite all the analysis and predictions, the value of stocks can fluctuate unpredictably. Stock prices are influenced by a myriad of factors, from company earnings reports to geopolitical events. In a casino, the spin of a roulette wheel or the random combination on a slot machine is equally uncertain. No matter how you strategize, the outcome is always up to chance. So yes, there are similarities between the stock market and casinos in terms of risk and uncertainty. However, these similarities are quite superficial when you delve deeper. While the thrill of uncertainty is present in both arenas, the stock market and casinos operate on fundamentally different principles, and this is what we'll explore in the next scene. So, how does owning a piece of a company differ from placing a bet on a roulette table? Well, the differences are quite substantial. Firstly, when you invest in the stock market, you're essentially buying a piece of a company. You become a shareholder, owning a portion of the assets and earnings of that company. You're not just throwing money into the wind and hoping it lands somewhere profitable. You're consciously making a decision to buy into a company's future. For instance, if you purchase stock in a tech company, you're essentially buying a slice of that company's future innovations, profits, and growth. On the other hand, when you place a bet in a casino, you're merely participating in a game of chance. You don't gain ownership in the casino or the game you're playing. You're simply hoping that luck is on your side and that you'll walk away with more money than you started with. Secondly, the stock market and casinos have fundamentally different purposes. The stock market's primary purpose is to facilitate the buying and selling of ownership in companies. It's a platform that allows investors to participate in the growth and success of businesses. Conversely, the primary purpose of a casino is entertainment. The games are designed to be fun, and the odds are typically stacked in favor of the house. Another distinction lies in the approach and strategy. Stock market investing often involves a long-term perspective. Investors might be saving for retirement, planning for their children's education, or simply building wealth over time. They use research, analysis, and informed decision-making to guide their investments. Contrastingly, casino gambling is typically short-term and for entertainment. The outcomes of casino games are largely based on chance, and while some games do require strategy, they don't involve the same level of research and analysis as stock market investing. In conclusion, stock market investing is not a game of chance but a strategic endeavor that, when done right, can lead to long-term wealth creation. So, despite the thrill and the risks, the stock market is not a casino. Let's recall the key differences we've discussed. At the heart of it all, when you invest, you acquire ownership in a company, becoming a shareholder. This is a far cry from the fleeting nature of a wager made at a blackjack table. The stock market's primary purpose is to facilitate the buying and selling of ownership in companies. It's a platform that allows you to participate in the growth of businesses, not merely an arena for entertainment where the odds are often stacked against you. And let's not forget the perspective. Stock market investing is typically a long-term game, with goals such as saving for retirement or building wealth. It's not a short-lived thrill sought out for a night's entertainment, but the paramount difference lies in the approach. Successful stock market investing relies heavily on research, analysis, and informed decision-making. Unlike casino games, which are largely based on chance, investing involves a substantial amount of skill and knowledge. So, while the stock market does involve risk and uncertainty, much like a casino, it also offers the potential for tangible, long-term rewards. It requires careful consideration, strategic planning, and informed decision-making, qualities not typically associated with the roll of a dice or the spin of a roulette wheel. Remember, the stock market isn't about getting rich quick. It's about making informed decisions, taking calculated risks, and building wealth over time. But enough of the serious talks. Let's go a bit light. Why don't they play poker in the jungle? Too many cheetahs. And while we're on the topic of games, here's another one for you. It's called the YouTube game. It involves 3 simple steps. First, give us a thumbs up if you found this video informative. Second, hit that subscribe button to stay updated with our latest videos. And third, drop us a comment below if you have any video suggestions or even if you want to share your favorite stock market joke. We truly appreciate your support. It helps us improve our content and keep these coming your way. And remember, every thumbs up, every subscribe, and every comment is a win in our books. So, are you ready to play?